Welcome to the Money and Meaning Show with Jeff Bernier, a show dedicated to helping you gain the confidence and freedom to lead a life of personal significance and help you get your actions and resources in alignment with what matters most.
Welcome to Money Meaning. I'm Jeff Bernier. Recently, a client sent me an article from the Wall Street Journal written by Peggy Noonan titled "Brace Yourself for the AI Tsunami." A few weeks ago, I was sitting next to a longtime client, someone who's smart, thoughtful, very successful. And he asked me something that really wasn't about financial planning or markets. He said, "Jeff, what if this AI thing really changes everything? What if we're at one of those moments?" It wasn't panic. It also wasn't excitement. It was uncertainty. And I realized something in that moment. AI isn't just a market story. It feels personal. It touches work. It touches identity. It touches what we think the future might look like. So today, I want to explore the question. Is AI the Terminator? Is it utopia? Or is it something in between? And what does it mean for the way we invest? The public conversation around AI feels almost cinematic, especially recently as there have been some new breakthroughs and tons is being written about the future. On one side, you hear stories about exponential productivity, medical breakthroughs, abundance, automation of drudgery. On the other, job displacement, misinformation, power concentrated in a handful of firms, and maybe even existential risk. The framing swings between salvation and catastrophe. But markets don't trade just on emotion. They trade on expectations. And expectations, especially around transformative technology, often runs ahead of reality. The tension is showing up recently in prices. Let's take a look at some data. The iShares Extended Tech Software ETF, symbol IGV, which holds mainly AI-linked high-growth software companies, is down more than 20% year-to-date. Meanwhile, the Vanguard S&P 500 ETF, VOO, representing the broader U.S. market, is roughly flat for the year. Now that's not broad market collapse, that's rotation. Investors aren't saying AI is dead, they're asking harder questions. Where are earnings durable? Which companies truly benefit from AI? Which business models are vulnerable to it? This is what markets do when enthusiasm meets valuation. They recalibrate, and recalibration feels uncomfortable. The idea that we're in an AI precipice suggests we may be crossing into a world fundamentally different from the one we understand. That possibility, I believe, deserves humility. Technological shifts do disrupt. They reshape labor markets, they create winners and losers, but they rarely unfold in straight lines. The future is almost never utopia. It's almost never apocalypse. It's adaptation. Slow in some places, fast in others. Messy, uneven, human. And that kind of future is very difficult to price perfectly in real time, which is why volatility exists. So let's ground some of this emotionally charged conversation in investment evidence. Our framework should remain steady during moments like this. First, markets are highly efficient. The current price of AI stocks already reflects enormous optimism about future growth. If you're overweight AI, but you believe it's transformative, you're probably not early. You're aligned with the consensus. Second, valuations drive expected returns. When a sector becomes very expensive, as software stocks have recently, future expected returns decline. That doesn't mean the technology isn't real. It means prices matter. That's why IGV can fall more than 20%, while VOO barely moves. Expectations adjusted. Not the existence of AI, but the trajectory and margin assumptions embedded in the price. Third, concentration increases risk. Overweight a narrative, even a compelling one, can expose you to risk that expectations can shift, and they always do. Sound strategy would advise you not to just sell everything, nor would it tell you to double down or back up the truck. We would say diversify broadly, own multiple sources of return, rebalance systematically, and accept uncertainty as permanent. Technological revolutions don't repeal the mathematics of investing. That conversation with my client stayed with me for a bit, and of course, all the new articles that are out just recently about some of the new breakthroughs have me reading a lot about both of these points of view. But beneath the questions about AI is something deeper. It's really this: how do I prepare for a future I can't fully understand? And the answer isn't prediction, it's resilience. You don't need to know whether AI becomes utopia. You don't need to forecast whether expectations cool further. You need a strategy that participates in progress without depending on being precisely right about it. If AI accelerates productivity, broad exposure will capture it. If expectations normalize, diversification can protect you. If outcomes land somewhere in between, as it usually does, you're still well positioned. That's not exciting, but it's powerful. So, is AI the Terminator? Is it utopia? Or is it something in between? History and human nature suggest the third: powerful, disruptive, transformative, but imperfect, adaptive, and human. And as I mentioned, right now, IGV down 20% or more, VOO roughly flat. Again, that's not chaos, that's markets processing uncertainty in real time. The headlines will swing, the narratives will intensify, the volatility will continue. But your job is not to win the AI debate. Your job is to build a portfolio and a mindset that can endure whatever the answer turns out to be. Because the future has always felt uncertain when we're in the middle of it. And disciplined investors don't need clarity about the future. They need resilience in the present. Thanks for joining me today on the Money and Meaning Show. Until next time, stay rational, stay diversified, and stay the course. Hope this was helpful. If you'd like to check out past episodes of the Money and Meaning Show, you can check them out wherever you stream your favorite podcast. Give them a listen, share them with your friends, and give us a rating would be incredibly helpful. If you'd like to reach out to me, I can be reached by email at moneyandmeaning@tandemgrowth.com. And you can check out our firm website if you'd like to learn more at www.tandemgrowth.com. Thanks, and have a great day.
Thank you for listening to the Money and Meaning Show with Jeff Bernier, a show dedicated to help you gain the confidence and freedom to lead a life of personal significance and help you get your actions and resources in alignment with what matters most. We would love to hear from you. If you have any questions or comments on the show, feel free to reach out to us at moneyandmeaning@tandemgrowth.com, or you can find us on the web at www.tandemgrowth.com. Jeff Bernier is the President and Chief Investment Officer at Tandem Growth Financial Advisors, LLC, an SEC-registered investment advisor. This show is a production of Tandem Growth Financial Advisors, LLC. All information discussed is general in nature, is provided for informational purposes only, and should not be construed as specific financial, legal, or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Listeners should not rely on the content of this podcast as the basis for any investment decisions. A professional advisor should be consulted and/or independent due diligence should be conducted before implementing anything discussed in this show. While information presented is believed to be factual and up-to-date, Tandem Growth Financial Advisors, LLC, does not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Tandem Growth Financial Advisors, LLC, does not make any representations or warranties as to the accuracy, timeliness, suitability, completeness, or relevance of any information prepared by any unaffiliated third party, such as guests on the podcast, and takes no responsibility for the same.